Hey guys, Andrew here from Property Association, and just want to do a video to say thanks to all our channel partner agents for helping us out with our Warwick Farm project, Pimble, Botany. We're very grateful. We know it's been challenging and your efforts are very appreciated. And we thought we'd also talk about some of the hurdles that we're all facing and how we can overcome those in the near future. So there's two main things I think that we're facing right now. One is that valuations are starting to consistently come in a little bit low, so we need to manage that situation really well. And the second thing is the market sentiment. So I think we can all accept that second wave from Victoria has reached us here in New South Wales, and how we're going to be dealing with that sentiment. It's really interesting. So I want to start off firstly in terms of the bank valuations. So what we're finding is for a very long time now that the banks have refused to use comparable sales within the building that you're selling in. But what's quite newish is that they are also now not using comparable sales in other new developments around you. So they're essentially looking for resales. So they're trying to say, does this brand new car price stack up with a demo car price, so to speak? And we just need to be aware of this, and we need to be quite open and forthcoming with information to the buyers. So the buyers and selling, in this day and age, is quite different to what it was 10 years ago. They've got access to information quite readily, quite easily, and really they're looking at you to help facilitate that transaction. Now, where we can add value is by building that rapport, and once they start to trust you, then when you start to tell them that this is how far it is from the train takes this long to get to the city, these are the schools, so on and so forth, because you've built that rapport, they don't need to cross-check that information, and so then you're adding value by saving them time. So as you build that rapport, you can start talking about the valuation side of things once you've had your offer accepted. And what's quite important is a lot of people don't understand how that funding process works, where banks have what they call a risk profile. They have a level of lending that they're comfortable and a level that they're not. I mean, at the end of the day, they're lending money, they're taking a risk. And there's only so much risk that they're willing to take. And that depends on their exposure in a particular area at any given time. It depends on their exposure to a particular type of product, whether it's houses, apartments, townhouses, skyscrapers, that sort of thing. So all these things play a part. So when Mr. and Mrs. Jones go and get a loan, the bank goes out there and has a look. Let's say they went to Commonwealth Bank. Now, hypothetically, Commonwealth Bank may have funded half the owners in that particular building. So when it comes time to assessing Mr. and Mrs. Jones, they're going to say, well, we're already highly exposed in this particular building or this area or whatever it is. We actually need to be a bit more conservative. So what we're going to do is we're going to ask Mr. and Mrs. Jones to put in a little bit more money to offset that risk for us. But we're not going to do that directly, because if we said, hey, Mr. and Mrs. Jones, this is the situation, they'd be, oh, great, thanks for telling me. I'll try NAB or I'll try St. George. So what they say is, oh, we'd love to lend you 80%, and we're still willing to lend you 80%, but the property's not worth what you're paying for it, so we can only lend you 80% of what it's worth. And that throws a huge spanner in the works if you haven't already addressed this with your buyer. So it's not about going up to them and saying, hey, we've accepted the deal, valuation's about to happen, this could happen. It's just about talking to them, adding it in conversation. Yeah, oh look, the area's cracker and there's all this infrastructure coming, and look, we'll get the valuer through, and did you go directly to the bank? Oh, okay, yeah. Well, look, just so you know, the way the funding works is if that bank hypothetically have funded half the building, they're going to be a little bit conservative. But let's see how it goes, and if that's the case, then maybe we can look at talking to a broker or looking at an alternative bank, blah, blah, blah. So if the valuation does then come in low, it's not a shock to the buyer. They're also more willing to consider alternative options and so forth. So I think that's something really important. Everyone's going to be quite proactive on managing that expectation in terms of, we go as far as offering to say, yeah, look, valuation should be fine. Here's a bunch of comparables. We're gonna show the valuer anyway. So that way the buyer's saying, oh yeah, look, there are comparables there, and so forth. The next hurdle that we're facing is that buyer sentiment. We can see in the last couple of weeks the level of inquiries have dropped off. We've had some restrictions kick in. There's more going to be announced. So it's definitely thrown anyone that had plans on the back foot. So the media is running with this big time. They're absolutely pushing this negative agenda, and we collectively have to be the alternative voice. We don't have the exposure the media has, but collectively, if there's enough of us basically saying things as they are, which was in May, late May, when we felt that we had overcome COVID-19, the market responded aggressively. And the first 2 weeks of June were really strong. Prices were up, sales were happening, deals were going on because there was a pent-up demand sitting there waiting just to feel comfortable to transact. So if we experience that then as soon as this second wave goes, in 1, 2, 3 months, whenever it is, we're going to have that pent-up demand and therefore transactions happen again. So as a buyer, do you want to get in ahead of the game, or you want to be caught up again where you were negotiating at 600, the developer wanted 620, and you were sitting on the fence, and in a blink of an eye, the property sold for 620, or the property sold for 630. And really, from 600, if you went to 605 or 610, you could have done a deal. So we don't know what the bottom of the market is. Nobody does. We don't have a crystal ball, and we only know the bottom when we look back and realise, prices have gone up. So we can only take what we do know, which was that when Corona hit, the market was suppressed. There was a pent-up demand. As soon as we felt we were over it, the market shot straight back, and it's going to happen again. And there's a lot of negativity, a lot of bad stuff, but the way I look at it is, in terms of our debt levels, which a lot of people talk about, yes, our household debts are the highest out there. Globally, we're right up there. But in terms of our government debt, we're actually really low. And so what it makes me feel is that, hey, our government has room to bail us out. Our government has lots of money to throw at us over the next 12 to 18 months till everybody gets back on their feet and gets us through this. So if you wanted to ask me globally, would I want to be in a position where our household debt was quite low, but our government was drowning in debt? Or would I rather be on the side of the fence where the household debt's a bit high, but our government's got plenty of money that they can access to help bail us out? Then I'd be on the side that we're on. So it's not about being falsely optimistic, and it's not about being out there and saying, yeah, the market's going to be hot. It's not going to be hot. But fundamentally, we've gone through so far pretty unscathed. September's the day now that everyone's talking about JobKeeper stopping, so on and so forth. 23rd of July, government's going to be announcing additional stimulus and whatnot. It's your job to be on top of that stuff. You need to know. You need to know what the government's talking about, what they're stimulating the economy with. So that way, when you're talking to your buyers, you can say, oh, look, we chugged along this far. Now there's more money being thrown. Our government's in a strong position. It can borrow heaps and still globally be super strong. We saw pent-up demand explode in June. We're going to see it again at the end of the second wave, and really give your buyer that confidence that basically the media's sucking out of them right now with all that negativity. So we're here to help. Any questions, anything you're stuck with, come to us, ask us, say, look, how would you approach this? I've got a client who's objected in terms of the property with this reason. Can we come about it in a certain way, so on and so forth? We're here to help, and we're looking forward to working with you and announcing some new projects as well. We actually got our hands on some really good house and land packages if anybody's got clients for that. But I'll be in touch, and let's get through this together.